Thanks for clicking. Canada's real estate market is going to peak this spring. This was the message coming out from a new report released by RBC. This report comes out on the heels of Canada's highest inflation rate in 31 years and renewed calls for the Bank of Canada to deliver a massive interest rate hike at its June 1st meeting, between 75 and 100 basis points.
More good news.
RBC's report suggests that these rising rates might finally burst Canada's real estate bubble, with the market peaking this spring, though I suspect it already has peaked. So what I want to do today is go over the report released by RBC, discuss its predictions for the Canadian housing market in 2022 and 2023, and then go over what to look for next. We've already received news that the average price of a house in Canada fell below $800,000 in March, and that was just the result of a 25 basis point rate hike, and we've just seen a 50 basis point rate hike this month. We'll no doubt have updates out on how that 50 basis point rate hike has affected Canada's real estate market in April, and we'll have those updates out in a couple of weeks. If you want to get those updates, make sure you click like and subscribe, but for now, let's get into this report. RBC's report begins with the premise that interest rates are going up to higher than pre-pandemic levels, or to 2%, 100 basis points higher than they are right now. As a result of these rate hikes, both past, present, and future, Christmas movie idea, as a result of these rate hikes, mortgage affordability will be impacted substantially, with the median household only being able to afford 15% less of a mortgage than they could a few months ago. This, RBC argues, will erase any gains in affordability that were brought on by pandemic-induced interest rates. With higher qualifying rates and relatively minimal help from the government, RBC says Canada is at risk of reaching worst ever levels of affordability by the third quarter of this year. So, with higher interest rates, higher mortgage qualification standards, and lower levels of affordability, RBC is expecting that we're going to see a major slowdown in real estate sales by the third quarter of this year. RBC is expecting that home sales will drop by 13% by the end of 2022 and drop by another 14% by the end of 2023. And this is where RBC sees the major reversal happening, as people start to get the idea that the party is over, that sales are down, that the market is no longer bullish as it has been over the past few years. We may start to see a fall in house prices, with the bank saying that by 2023, Canadian house prices could reverse by 2.2%.
And what good does that do?
No, I understand, and this is just one prediction, but 2.2% reversal is much better than a 20% gain, depending on who you are. Where you sit is where you stand. Now, it's important to remember that RBC isn't seeing a major price decline in 2022. They are seeing our growth rate decline, but because of the substantial gains made from the housing market over the first few months, it's going to skew the rest of the data. So if we had, say, 20% house gains in the first 2 months, and then we see 0% over the next 2 months, that's going to look like a 10% increase, even though house price growth is slowing substantially. So to summarize, RBC is thinking that mortgage rates are going to go up by at least 1 more percent, 100 basis points by mid-year. This is going to cause major strains on affordability, which is going to cause the market, the house price growth that we've seen for the past few years, to stop. As a result, by 2023, RBC thinks we should start to see some price declines, though those price declines are going to be more heavily felt in the more expensive markets, in Toronto, in Vancouver, etc. These markets could very well see even more significant price declines than we're going to see nationwide. But I think RBC is being a little overly optimistic. Given that the 25 basis point hike that we saw in February was enough to cause a major slowdown in March's real estate data, we're seeing lower home prices Canada-wide. In my hometown of London, Ontario, we saw a reversal of our own average house price. And all over, we're starting to see more signs of a decline in Canada's real estate market. We're seeing multiple offers. We're seeing less multiple offer scenarios. We're seeing more conditions. We're seeing lower prices. All of these are signs of a market that has already peaked, not one that is about to peak. And this was just brought on by a 25 basis point rate hike. We don't yet know what the effects will be of the 50 basis point rate hike that was brought in to effect early this month. We won't have that data out for another week or so. But I suspect if 25 basis point rate hike was enough to cause at least a marginal slowdown, we should start to see these effects come even more into play in the next couple of weeks, next couple of months. We've already talked about how mortgage affordability has flipped, where now buyers are having to qualify at much higher mortgage rates than they did before. So I think this is going to have a real impact on the real estate market, and it probably already has. We just don't have the data yet. Obviously, when we do get that data, we will have updates on this channel. Click like and subscribe if you want to get those updates, and thanks so much for watching.